All right, everyone, welcome back to Crypto Brain. And before we begin today's market breakdown, make sure you subscribe to the channel because here we focus on logic, data, and market structure rather than hype. And if you want to stay ahead of major crypto movements, this is exactly where you want to be. Now, today's analysis focuses on something that has quietly started developing inside the market surrounding the token cryptocurrency, Toshi. And Toshi has a potential bounce structure forming after a period of consolidation. And when we talk about a bounce in financial markets, we're not simply referring to a random price movement, we're referring to a structural reaction where prices stabilize as liquidity begins returning, and buyers slowly start regaining control of the order flow. Over the last several trading sessions, the first signal that started standing out on the chart is the behavior of trading volume, because volume is one of the most powerful indicators in any market. It reveals when real capital begins entering the system, and recently we've started observing an interesting pattern where volume begins expanding while price action stops declining aggressively and instead starts stabilizing, which often signals that sellers are gradually losing dominance and buyers are beginning to step back into the market. Retail traders usually react after a move has already started, but whales operate very differently. Large investors prefer positioning themselves before the majority of the market notices what is happening, and this behavior is what analysts are closely monitoring right now because several patterns visible across the trading activity suggest that accumulation may be quietly taking place inside consolidation zones rather than during hype-driven rallies. When large holders accumulate positions, they rarely execute one massive order. Instead, they distribute their entries across multiple smaller transactions over time, which allows them to build positions without dramatically disturbing the prices structure. And this type of behavior is commonly referred to as straight accumulation because it allows whales to absorb available supply, while the broader market remains relatively calm. When this accumulation process continues long enough, something important begins forming beneath the market surface, a liquidity base, and liquidity bases are extremely important because once enough supply has been absorbed, the market becomes far more sensitive to incoming demand, meaning that even moderate buying pressure can suddenly push the price upward much faster than before. Now there is another discussion beginning to circulate across the broader crypto community, and that discussion involves the possibility of ecosystem expansion, particularly through major trading environments such as entity, company, which remade Binance's set exchanges in the world. And whenever a token begins centering conversations connected to a major exchange environment, analysts immediately begin evaluating the potential liquidity implications. There is very simple access. When a token becomes visible and accessible to millions of global traders, the number of potential buyers increases dramatically. And once accessibility increases, trading liquidity often expands rapidly, which can accelerate price discovery and create stronger upward momentum within the market. Historically, many successful crypto rallies have followed a similar sequence. The first stage is quiet accumulation. The second stage is visibility expansion, where the asset begins gaining broader market attention. And the third stage is liquidity acceleration, where increased demand begins driving aggressive price movements. What makes the current structure around Toshi interesting is that elements of the first stage appear to already be visible, while early discussions surrounding the second stage are beginning to develop within the market narrative. And when these two stages start overlapping, experienced traders usually begin monitoring the market much more carefully. But to properly understand the potential magnitude of any movement, we also need to examine market capitalization logic, because market cap determines how much capital is required to move an asset's price, and compared with large established cryptocurrencies' smaller market cap, tokens can react much more aggressively when liquidity begins entering the ecosystem. In practical terms, this means that if demand begins increasing, and if trading access expands through larger exchange environments, the percentage price movements can become significantly larger than what most traders initially expect. And this is one of the key characteristics of early-stage market cycles, where assets often move quietly at first before suddenly accelerating once the broader market begins noticing the developing trend. If we combine the elements currently forming around the market, we begin to see every interesting structure appear. First, we observe stabilization in price behaviors. Second, we observe RV expanding trading volume, which suggests participation is increasing. And third, we observe growing discussion about liquidity expansion within the broader trading ecosystem. When these signals begin aligning, the market of 10 enters what professional analysts call our discovery phase, which is the period where price begins searching for a new equilibrium level, and during discovery phases, volatility tends to increase significantly because the market is attempting to determine where the next major valuation should exist. However, experienced traders always approach these situations with discipline because volatility operates in both directions. Strong upward movements can appear, but corrections can also occur quickly, which is why the most successful analysts focus on structure and liquidity signals rather than emotional market reactions. Right now, the structure surrounding Toshi is what has traders paying attention. If accumulation continues, if trading volume remains strong, and if liquidity access expands across larger trading ecosystems, the probability of a stronger bounce scenario gradually increases, and if momentum begins accelerating, the market could transition from quiet positioning into full public attention much faster than many people expect. And historically, the most explosive crypto movements rarely begin when everyone is already watching. They usually begin quietly, while only a small portion of the market recognizes the signals developing beneath the surface. For now, the most intelligent approach is observation, watching volume behavior, tracking whale activity, and monitoring liquidity signals, because those are high indicators that usually appear before major market expansions begin. And if the structure currently developing continues evolving in the same direction, the coming weeks could become very interesting for the market surrounding entity cryptocurrency. Thank Toshi, you found this analysis valuable. Make sure you subscribe to the channel for more professional crypto breakdowns. Stay analytical, stay informed, and remember, in the world of crypto, the biggest opportunities often appear long before the majority of the market even realizes what is happening.